Welcome to this week's weekly stock market roundup. As of today, BSE Sensex closed at 82,626.23, up 0.88% from last week, Friday, 12 September 2025, where it had closed at 81,904.70. On a year-on-year basis, it was down 2.27%. Last year, it closed on Friday, 20th September at 84,544.31. On a 10-year basis, it remains high, and this is the performance for the last 1 year, as you can see, and this is how it looks like if we kind of bring it up properly. For NSE 50, it closed at 25,327.05. It was 0.85% up week on week. On a year-on-year basis, it was down 1.80, where the performance of last year, 20 September 2024, it was at 25,790.95. On a 10-year basis, this is how it looks like, and this is the performance for the last 1 year, as you can see. Looking at the news, one of the most important news that has been sidelined by the Fed rate cuts and the trade talks has been the SEBI infrastructure push. The regulator has pushed for expanded investor interest via pension funds, mutual funds, and retail investing. Now, this is likely to help the infrastructure stocks in the future, and there'll be more liquidity, and it might even reduce the volatility over time. In terms of global policy headwinds, the US Fed rate cuts have actually helped. The 25 BPS cut to 4 to 4.25%, and there's more signals of easing in 2025. It had a positive impact globally. In India, because of that, stocks rose on Thursday, as you would have seen, and you will see also in the future as we go down. Now, in the India-US trade talks, the officials have been describing it as positive and forward-looking. There was an agreement to intensify efforts for a early mutually beneficial deal despite tariff restrictions. And the commentary from policymakers suggested that potential room for tariff de-escalation ahead, which supported equities along with the Fed rate cut narrative. In a very important piece of news, Adani Group got relief from SEBI because of the key Hindenburg allegations. Some parts of Adani Group have actually rallied because of that strongly, as we'll see later on in the slides. Now, the order focused on transactions that were found not to violate regulations during the relevant period. Certain probes are still going to happen in the future, but this is still overall a very positive news. Now, on Friday, after there was a 3-day rally, there was a profit taking. So, the early gains from Fed rate cuts and the trade optimism talks around that, they have kind of eased later on Friday. The Sensex and the Nifty dropped slightly. In terms of rupee and the bond yields, the rupee ended slightly stronger at 88.09. It was hovering around 88.10.15 approximately USD most of the time for this week. And also because of the Fed rate cuts, India 10-year yield edged higher. It had opened at 6.491 on Thursday as compared to the previous close of 6.473. In another piece of news, the excessive rain in key states is threatening crop yields, potentially fueling food inflation in the future, especially in staples. Now, experts are saying that the market may begin pricing in the inflation risk, but the pressure margins for FMCG may increase, and it may affect the CPI readings and also influence how the RBI looks at the sector. Now, in terms of the sectors performing the best and the worst on the BSE, the realty, power, utilities, industrials, oil and gas were up. The most best performance this week was by realty, which was 4.36% up. And in terms of the bottom 5, it was consumer durables, which was at the very bottom, and it was negative 0.82. Then FMCG was minus 0.24. Healthcare, financial services, and metal kind of rounded up the remaining 3. In NSE, it was PSU banks that were the top performers. Realty, mid, small, IT and telecom, oil and gas and pharma were the remaining 4. At the bottom indices, FMCG, media, consumer durables, mid, small, healthcare and healthcare index were kind of at the bottom. Now, if you look at it, compare it to the BSE, you will see that realty was kind of performing here and here also in both ways, and here also FMCG, consumer durables were kind of not performing very well in both the indices. In terms of stocks, Adani Power, Anantraj, Tanla Platforms, Adani Total Gas and Ipca Laboratories were kind of the best performers day on day for basis Thursday to Friday. On a weekly basis, Anand Raj performed quite well. It was up 20.02%. And from SEBI's reductions, Adani Power, Adani Total Gas, and other Adani companies also kind of rallied in this week. Of the stocks that were down, Relaxo Footwears, Jubilant Ingravia, Piramal Enterprises, DCM Shriram, and Paytm 197 Communications, they were down. Overall, the weekly performance was also kind of in line with the daily changes. In NSE stocks, Intense Technologies, Natural Capsules, Trigin Technologies, Adani Power, and Bharat Gas were up. In terms of the weekly performance, Intense Technologies was up 44.02%, while Natural Capsules and Trigin Technologies were up 29.72 and 20.72 respectively. Adani Power obviously was up 10.42, comparable to what it was performing at the BSE also. In terms of the stocks that were down on NSE, Twamev, Constructions and Infrastructure, Sarveshwar Foods, PC Jeweler, Lokesh Machines, and Relaxo Footwears were down. Relaxo Footwears, as you would remember, also was down. On the BSE, it was the lowest at the top of the bottom performers. And here also, its performance has been likewise. On a weekly basis, Twamev Construction Infrastructure was down 10.71%. And even the Lokesh Machines was actually minus 6.79 from the previous day. On a weekly basis, it was down 8.17. So this is it for this week. Thank you so much for watching. Thank you so much for listening, and have a very good week ahead. Goodbye.